What's up, guys? I'm nobody special, and I'm very fortunate today. I have David Morgan from the morganreport.com is with us to talk about my favorite of the shiny metals, silver. David, how you doing today?
Jack, I'm doing good. Thank you for having me.
Thank you for coming on. We last spoke. We talked on the phone a couple of weeks ago. Silver was in the middle of a little bit of a run. The price had just peaked over about $21 an ounce, and inventory counts were getting low. We were in like the mid 40 millions in the Comex Registered category. And I remember that conversation well. I asked you, I was like, hey, does it feel like this is finally it, or do you think they're going to smash it down again? They being the alleged manipulation. Um, and sure enough, since then, silver's down almost $2 an ounce, and yet the inventory is even lower. So, how much lower can this, or how much longer can this go on? Prices continue to head lower, inventory continues to head lower. It's kind of counterintuitive. I thought when supply gets tighter, prices are supposed to go up. So, what are we seeing, David?
Well, we're seeing how the price is set and the risk of repeating myself a thousand times. What we're looking at when we say the silver price, we're looking at a price of a derivative. That's what we're looking at. We're looking at what is the derivative. Now, in fairness, there's enough physical silver to meet the demand that the COMEX allocates out. Shouldn't use the word allocate, that the CMA determines can be fulfilled in a physical way. So let me explain that a bit further. I've had several, I wouldn't say thousands, but several instances of people that are close to me or find my website or whatever, and they'll send me proof that they have, a mini contract or, the regular contract, 5,000 ounces. Maybe they've got three contracts. So they want delivery of 15,000 ounces plus or minus, and they get a letter back from the exchange saying here's your check. You have to settle in cash. So how much does that go on? The answer is I have no idea. It's probably just the little guys at every delivery month. I don't know. What I do know is that all I do need to do is prove the data point once that not everyone that's standing for delivery is getting delivered. That only takes one data point. Have more than that. Is it a major factor or not? I don't think it is, but I want to bring it to everyone's attention because this is the direction we're going, Jack. Because
Right.
in the rule book, their rule book, you have to settle for cash. So if they can't send the silver, even though you're standing for delivery, you may not get it. And I
So that
think
wouldn't
that,
technically be a default, right? If it's already in
yeah,
their rule book.
yeah, that's the whole point. I didn't mean to cut you off. That's the whole point. I mean, there was, they will puff out their chest and say we didn't do anything. Read the rule book, but us in the know would say, "Ha ha, they've done it. They're done." Now the physical market is going to go to a super premium on, and just really bifurcate from the derivatives price. And the derivatives price is either going to have to come up or close down to COMEX in the extreme case. Will that happen? I don't know. I kind of doubt it, but it's a possibility that this mismatch has to be corrected at some point.
So what we're looking at here on this chart, this is Comex Registered Silver. This is the market for silver,
Yeah.
right? This is where the price is set in the Comex
Okay.
futures market. And this is a chart that was put together by a guy named Ditch the Deep State in the Wall Street Silver Group on Reddit. This guy does fantastic DD and regular updates on the state of things in the silver market. And just yesterday, there was another 2 million ounces of silver was taken out of this registered category. We're down to 36 million ounces. When the silver squeeze started in 2021, there was 149 million ounces in this category. Now you can see that even though the price has headed lower, the inventory continues to drop, and this trend is getting steeper. Now, right now, we're on pace. If this trend were to continue, we're going to hit zero sometime end of March, early April, unless something changes. Now, the COMEX is only a silver market as long as there's silver at the market.
All right.
Right now, what you mentioned, how they can say we'll force you to settle in cash. Yes, that's in their rule book, but they can only play that card so many times until eventually people realize, hey, there's no silver here. I can't get it here. I'm going to go somewhere else to get it. So I guess I'm asking you, you've been in this game longer than I have. You've seen more of their tricks. What are some of the things that could happen? I mean, if you extend this trend line, all the way down to zero. Something has to give between now and then. What do you think that looks like? Is there a new supply that comes to market? Do they suddenly let the price rise? Is there some other event?
Yeah, great questions. Let me back up something you said is, well, they will have to go somewhere else. And that's true, but really, most of the users, 50% of the users of silver are industrial, really 55%, according to the Silver Institute. And I would say I'd say almost all of them get their silver not from the Comex. The Comex is like a display case. So when we start draining the Comex, it's indicative of that's the last resort. That's the last place you can get it because the refiners can't supply the demand. And I'm going to build a pretty strong case for that. I'd also say you asked, well, what will happen? I could tell you what historically has happened, and it's kind of irritated me, but never said I know everything. I've seen it down to around the 35 million ounce mark in the registered category a couple of times. I can't quote the dates. And in both cases, there was a big influx of silver coming in, and the inventory built back up on the registered category. I think very strongly it's different this time because the LBMA is being drained, the COMEX is being drained, some of the refining and smelting, et cetera, is curtailed because of less supply, lower grade, being under the price of production, the energy crisis in some of the European countries that do smelting and refineries. So I think it's all coming together, Jack, to that perfect synergy of supply demand, smelting capacity, premiums, demand for investment purposes or preservation of capital, further demand on the industrial side, i.e., solar panels, somewhere in the EVs. I don't count that as very large. It's not yet. But there's all this coming together. And I think the trigger point is when Elon Musk says, I need silver or I'm out of business. And maybe he's already there. There's some words out there in our space that's saying that's the case. But Apple Computer, I mean, all these that use a small amount of silver, but their product cannot be made without it. So as this dwindles and the Apple computers, some Samsungs, whomever, cannot get silver from the normal supply chain, meaning the refinery or refineries that they normally get it from, and they've got to go to the COMEX, game's on. Now, am I right about all that? No, it's mostly conjecture, but as you said, I've been in this market a very long time. And if the exchange isn't worried by now, I don't know what will worry them. Because if there was any way to replenish the registered category, they would start here pretty soon. Could it happen? Possibly. I really doubt it. And I agree with the current, the trend in motion continues until it actually stops. The trend has been clearly a drain of both the LBMA and the COMEX. And just a shout out to Ditch the Deep State. I love the name and I concur and thank you for the work you do.
You touched on a couple of things there. We'll take them one at a time. The first, you mentioned the possibility of an influx of new supply coming to the rescue to provide liquidity, if you will, to the silver market. We did see something similar to that with gold in 2020, where there was a big influx of gold from the LBMA into the COMEX. Basically, the LBMA bailed out the COMEX. So we could conceivably see something like that. That would be gold flowing west or silver flowing west. Although, as you mentioned, it is kind of unlikely, isn't it? Because right now the trend is actually in the other direction. The precious metals are flowing east to China, and more notably, India is suddenly a big demand of silver. I'm seeing lately. So the idea that the LBMA might suddenly ride to the rescue of the COMEX, it could happen, but the situation right now doesn't really support that because the LBMA, as you mentioned, is also seeing something similar. So, where else might a sudden influx of supply come from if not from the LBMA? Is there even another option then?
There could be one I'm not aware of, but I doubt it. I think it's pretty clear cut. And again, I agree with you, Jack, that the likelihood is very small. I don't think there's anyone coming to the rescue this time. And that in itself will tell us a lot. I mean, as I've said, I'll repeat, I've seen it down this low a couple times. Well, if it gets to 30, I don't know the exact number. I think 35 sticks in my head, and I've got a pretty good memory when it comes to silver. So let's say it gets to 30. All right, maybe it's been that low. I'm not sure. It gets into the 28, 27, 26, 25, 24 in that range. I know from my work, it's never been that low in the 20 years I followed this thing almost daily. So that's new
So
territory, which suggests, there is no one coming to the rescue. They don't want it to go that low. They've let it go this low a couple times. You know, the white knight comes in and saves them, but we'll see.
now the other thing you mentioned there in your previous answer was you mentioned the refiners, and you touched a little bit on Europe. Right, we're seeing a lot of things in the silver supply chain, higher energy costs, the prospect of smelters and refiners shutting down in Europe. Um, Miners, especially some of the smaller mining companies, they're being hit from both ends right now. Higher energy costs, higher oil prices, higher fuel prices, higher labor costs, and at the same time, lower silver prices. So, do you see any curtailment of the supply, the influx, because the COMEX is dependent on regular deliveries of bars to offset the outflows. So could we be seeing the supply being cut off also?
I would say cut off, but certainly curtailed in some places. I mean, this is common sense, but I think it bears speaking about. So if you're going to mint a silver eagle or a gold eagle, you're using the same amount of energy, basically. Gold's is slightly denser than silver, but let's just pretend they're the same, and roughly they are. So if you're going to put in a 1 ounce blank of gold and you press it and mint it with the eagle on it, it says United States of America on the back or the obverse. It uses the same amount of energy whether you press it out in gold or press it out in silver. So what's the cost? Well, the cost is much higher percentage in silver than it is in gold because gold's unit value is what, 90 to 1 or 85 to 1? I don't know if the ratio is today, but you get my idea. So if it costs 50 cents to press out one coin, 50 cents on an 18 or a $1,700 item is very small. 50 cents on an $18 item is a much larger percentage. So take that. So I'm sure almost everyone can follow that. So if you take that same idea to the smelters and you say, hey, I'm smelting lead, zinc, copper, silver. Silver's much higher unit value than lead. But what you see, I'm saying is the electricity costs, the input costs are so great, and the output is not commensurate with the amount of energy going in, you won't do it. You're not going to smelt copper at a loss, or tin, or lead, or zinc, or iron ore, or even silver. It's probably wouldn't happen with silver, but you get my idea. So this alone will curtail it, not counting labor problems, shipment problems, inventory misallocations. I mean, the silver industry, because I don't know exactly whom, have shipped silver, as you said, Jack, from west to east, paying like $1 an ounce premium on a commercial bar just to get it to the location so they continue their production of whatever it is, which it could be coins, but not always. It could be mesh or bars or shot or plate or all the different ways silver is fabricated, which is like 1,000 different ways that it's used in industry. So when you need it, you're going to buy it. And when you buy it, the set price becomes less and less important relative to your, again, industrial or investment demand that says, I don't give a darn what this derivative price says. I want it. And for me to get it, I've got to pay this price.
Yeah, so clearly silver is much more sensitive on a unit basis, on a percentage basis to fluctuations in energy prices, whereas gold not as flexible. So if you're a smelter and you're faced with the difficult decision, or a refiner where you need to cut back production, you're more likely to cut from the silver side versus the gold side.
Right.
So silver is clearly more sensitive. Now, I saw something else interesting today. Anytime silver supplies get low and the price heads lower, we tend to see things like this. This is on JM Bullion right now, $39 for an American Silver Eagle at a time when the spot price is hovering around 19. So, I mean, we're looking at almost 100% markup on a random year ASE right now. So we've seen this before. The price starts to move, the inventory gets tight, but the retail buyers aren't really able to capitalize because it just ends up with blowout premiums, and you end up overpaying for your silver. And you brought up something interesting before we were talking regarding the U.S. Mint and their production of Silver Eagles. I wonder if you could talk a little bit about that.
Yeah, I got called out by a good friend of mine. I won't name him because it really is not important to the facts. But a lot of chatter's been going on about what's happening at the U.S. Mint. So this will be a bit of a long story. But first of all, the U.S. Mint, the previous mint master made the comment that there was a world silver shortage. I don't know. I think some of us caught that. And I actually got a call from the Silver Institute saying, you know, that's incorrect. And maybe it was. And there'll be a retraction. And there was a retraction. But still, the idea I thought was very, popular among us because it's like, holy moly, here's the mint telling us there's a silver shortage. So they retracted and said there's a shortage of basically the planchettes or blanks that they can achieve, accomplish, produce from their source and mint out the Eagles, silver Eagles. So many of us know that the mandate is that the mint is supposed to meet demand from the public, and they haven't for years. I mean, some years they have, but some years that the demand was higher than what they're able to produce was due to production limits. In other words, they didn't have enough presses to press out that many. And then they retooled and bought more, and they got the production rate up to maybe 40, 50 million, perhaps. I don't know. Maybe they could do 60 million if they were 24/7. I don't know exactly the flow rate. My point is that I was corrected on that statement that the mandate is to meet demand from the public. And this actually happened way back in 2010, Jack, and I have it here in front of me so I can read it.
Sure.
But this is straight out of public domain. Anyone can verify it. At the request of the United States Mint, a bill with a legislative fix for problem was introduced known as, quote, Coin Modernization Oversight and Continuity Act of 2010, unquote. So this happened in 2010. The bill was passed in the House of Representatives and Senate and then became public law number 111-302 with Obambo's signature. Under the act, previous requirements related to issuance of American Silver Eagle bullion coins were changed. The new requirements called for the Secretary of the Treasury to strike the coins in both quantities and qualities that the Secretary determined to be sufficient to meet public demand. So now it's out of the context of whatever the public demands, it's whatever the Secretary determines to be the public demand. The purpose, and this one kills me, the purpose of the change was to allow proof silver eagles to be produced even at times when bullion coins were not being minted in quantities needed to satisfy full public demand. So let's do a thought experiment on that. Silver is so tight that you can only mint out of the US Mint 10,000 eagles. And this law says, well, we're going to make 10,000 proof eagles because we don't give a darn what the public demand is for bullion eagles. We're going to satisfy the coin collector demand, and that's 10 million of them. And that's what we're going to do. Just throwing that out there so people get the idea of what this law says. So I gooned it. I missed it. I was corrected, and I'm happy to report it because it does help explain why we're seeing such a small flow of silver coming out of the mint and these extraordinary premiums. I want to add on to it just a bit, Jack, please, because
Sure.
See, I don't need to really show my address, although it really doesn't matter. But so I got this in the mail. This is for what's called a type set, which is every silver eagle that's been minted from 1986 till today. And as you can see, the price is like $2,400. I encouraged a lot of my premium members, my paid service, to build a type set. The late great David Smith did it for his family. I've done it for mine, and all that is one coin for every year that it's minted. Well, this outfit's putting that all together for you, and I can't do the math perfectly in my head, but roughly it's from 1986, 96, 2006, 2016, 2026 would be 40 years. It's not that long. It's 37. I'm going to use 40. 40 times 30 is 1,200. And you're not paying $30 for a silver eagle, because I know I was buying them for about $3 over for many, many years. But let's just round it up to 30. At some years are low mintage and you do pay higher. There's only about 3 or 4 years that you do that. So I'm just going to go 40 times 30 is 1,200. And that's being extremely generous. And now it's 2,400, and they'll sell these because, in fact, nothing's better than a type set when they quit minting. I mean, if they stop minting and you've got one of every year, now the coin collectors, and that's not my area of expertise, but I've been familiar with it for years, so I know more than the average bear. But I just want to point out that you think the premiums are bad on the Silver Eagles. I don't know how many of these guys are going to sell with these, mailings, but I'll bet you they do pretty well on it. They're probably buying them. I doubt they're even doing 1,000 to get the product, and then they're marking it up 2.5 times.
So, long story short, they changed the law in 2010 to where the mint no longer needs to mint enough to meet demand, that they basically made it's up to the opinion of the Secretary of the Treasury how much is appropriate. And just to refresh people's memory, the Secretary of the Treasury, yeah, that's Janet Yellen, former head of the Federal Reserve, now Secretary of the Treasury. So it's up to her how many American Silver Eagles the market really needs. And, well, limiting the supply of American Silver Eagles is one way to reduce the demand for the source metal and to blow out the premiums. I mean, really, if you're looking for a way to kind of keep the price lower, well, this is a good way to do it, isn't it?
It
American
is
Silver Eagles
indeed,
is the most
especially when
popular.
the Eagle's the most demanded government minted coin out there by far, really, much more than South Africa just started minting silver recently, and the Austrians, the Libertad from Mexico, the kookaburras or whatever it is from Australia. I mean, all these other government mints do not produce the quantities. The Canadian maple, they do not produce the quantities that they do in the U.S. for silver eagles. And one other aside, and I'm not trying to scare anybody, Jack, but I know you're open-minded, and the most counterfeited coin is the silver eagle. So
Yeah.
you want to be a little bit careful. I would highly recommend anyone that's buying buy from a dealer that's well known, not off of eBay. The Chinese have done a pretty good job of forging or counterfeiting the silver eagles. I was in Mike Maloney's office way back when, and James Anderson was still working for Mike at the time before he went to JM Bullion. And he came into the conference room there and he dropped 2 eagles on me and said, "Okay, which one's counterfeit, big boy?" You Mr. Guru. So I took him and I spun him on the desk and I listened. And it was obvious because there's a very good acoustic quality to silver. No one talks too much about it, but that's why a trumpet could be silver sometimes, clarinet. There's lots of musical instruments that are actually made of silver. So, so I listened and it was obvious. But by looking, and I studied them, Jack, pretty carefully. Nah, not with my old eyeballs. I couldn't see a difference, but I could hear it.
It's your ears. They call it sound money for a reason, right?
Yep.
It's your ears that can tell the fakes not your eyes. And there are some very good counterfeits out there. It's scary. I mean, it's a scary space to wander into. There's a lot of garbage out there, and it's even worse in the gold market. I mean, there's a lot of these gold-plated tungsten bars floating out there, and the only way to tell is to drill them. And you spend a couple $1,000s for a shiny new gold bar, and nobody wants to put it on a drill press to see if it's tungsten on the inside or not. And the scale can't tell the difference because the atomic weights of the two metals are almost identical. So it is a scary place to be, and it matters who you buy from, folks. And the best price is not always the best deal. Keep that in mind.
Jack, I want to stop you there on the gold situation. And this is my hypothesis, can't be proven. But I do think that, first of all, I know that some of those tungsten bars made it to China. How many, when, I don't know. What I do know is some did. It was reported, at least it was reported in their press. It's been quite some time now that China's really only accepting gold kilo bars. So my hypothesis, Jack, is that they re-refined. And look, who would want to take a gold bar and re-refine it? Makes no sense unless you've got some impurities. So they basically have set a new gold standard, if you will, of taking whatever they have, re-refining it into kilo bars. Have they done it with every bar that's sitting on their shelves? I don't know. What I do know is that could have, I'm not saying would, I don't know. I'm conjecture here that was a reason why they started saying, we're not going to get screwed again. But in the gold market, we're talking the international banks poo-poo gold on the surface, but they still hoard it. They still keep it. They still buy it. In fact, just to go one step further, showing my age, at one time, the BIS, the Bank for International Settlements, never allowed you to report your annual report in fiat. They didn't give a damn what your foreign exchange holdings were or how many bonds you held. All they cared about was what were your gold holdings. Now that's gone to the bye-byes, but that's way back in my early days when I had more hair.
Augustin Karsten's in his big push for CBDCs. I don't think they're too worried about how much metal they have in their vaults at this point now.
Yeah.
Well, David, I want to thank you very much for taking the time to talk to us, folks. And real quick, let's get Janet Yellen off the screen here. This is David's website, themorganreport.com. I highly recommend you check that out. You've got a newsletter that people could sign up with on email. How else can they see your work, David?
Just go to the blog page, and basically most of the stuff I do in the public domain is there. I also have a Substack, and I don't know how to get there exactly, but most you people know. Just go to the Morgan Report Substack or something like that. You'll find it.
All right. Well, David, thanks again for taking the time to talk to us, folks. And until next time, everybody, live small and dream big.